Hey everyone, Vishal Kapoor here, and welcome back to A Real Estate Wisdom with Vish. Today, I want to talk about something that a lot of buyers, homeowners, and investors are asking right now. Can you still make money in the current GTA real estate market? And more importantly, what type of property actually gives you the best chance of cash flow today and appreciation over the next 4 to 5 years? Because let's be honest, this is not the same market we saw a few years ago. The GTA market is more selective now. Buyers are more cautious. Sellers are more realistic. Inventory is higher in many areas. Condo prices have been softer in a lot of segments, and the numbers matter a lot more than hype. So, this episode is not about wishful thinking. It's about real strategy. The big question, the biggest mistake I see people make is this. They start by asking, what can I afford? That is not the full question. The better question is, what can I afford that will still make sense after closing, after expenses, after financing, and after the market changes a bit? Because in real estate, you don't make money only when you buy. You make money by buying the right property in the right location at the right price with the right exit strategy. And in today's GTA market, that matters more than ever. What good looks like? For me, a good property right now has to check 3 boxes. First, it should have a reasonable path to cash flow or near cash flow. Second, it should be in a location where people actually want to live, rent, or buy. Third, it should still be desirable 4 to 5 years from now when you decide to sell, refinance, or move. That sounds simple, but it weeds out a lot of weak deals. A property may look good in the listing photos, but if the monthly carrying cost is too high, the layout is awkward, or the tenant demand is weak, it can become a financial headache very quickly. Let me give you a real lifestyle example. I recently saw a buyer looking at a newer freehold townhouse in the outer GTA. Nothing fancy, no rooftop terrace, no luxury finish package, no dramatic wow factor, but it had something much more important. A practical layout, enough space for a family, reasonable maintenance, and a location that made sense for everyday living. The buyer wasn't trying to impress anyone. They were thinking like an investor and end user at the same time. That's the kind of purchase that can work well over a 4 to 5 year period. Because a townhouse like that usually has broad appeal. Families like it, renters like it, future buyers like it, and if you buy it at the right number, it can hold value better than people expect. That's the point. Sometimes the smartest property is not the flashiest one. It's the one that solves a real life need. Now, let's talk about condos, because this is where a lot of people get caught. I also saw a very typical GTA condo scenario. A couple wanted to buy a condo in a prime area, but instead of chasing the biggest unit or the newest looking listing, they focused on the best layout and the best carrying cost. That matters a lot, because a condo can look affordable when you only look at the purchase price. But then you add condo fee, taxes, mortgage cost, and maintenance, and suddenly the monthly number gets tight fast. They understood that the goal was not to buy the best condo emotionally. The goal was to buy the condo that made the most sense financially and could still be easy to rent later. That is the right way to think in this market. And to be fair, not all condos are bad. Some still make sense, especially if the location is strong, the building is well managed, and the layout is functional. But with condo prices under pressure in many parts of the GTA, especially the resale condo market, you have to be extremely selective. Now, let's talk about one of my favorite strategies: secondary income potential. I had a conversation recently about a property that looked ordinary at first glance, just a typical house, nothing dramatic. But the buyer saw something else. They saw basement suite potential. And that changes everything. Because if you can create a legal or well planned secondary unit, suddenly your property has another income stream that can help offset the mortgage, improve monthly cash flow, and make the property much easier to hold over time. This is one of the biggest reasons some properties quietly outperform others. Not because they are prettier, not because they are newer, but because they create flexibility. Flexibility is power in real estate. So when people ask me what property type has the best chance of cash flowing and appreciating over 4 to 5 years, here's how I break it down. Freehold townhouses, these are often one of the strongest balanced options. Why? Because you usually avoid condo fees, the monthly carrying cost can be more manageable, and the property tends to appeal to both families and future buyers. If that townhouse is in a good school district, near transit, or in growing community, it can rent well and resell well. If the budget and financing work, a triplex or fourplex can be an excellent wealth building property. The reason is simple. Multiple income streams reduce risk. If one unit turns over, you still have the others producing rent. These properties can also be attractive to future buyers because they combine income and long-term value. Homes with suite potential, a detached or semi-detached home with a basement apartment or secondary suite opportunity can be a game changer. This is especially useful in a market where borrowing costs are still important and every dollar of rental incomes matters. Yes, condos can still work, but I would be very selective. Look for good layout, strong building reputation, manageable fees, real rental demand, and location that supports long-term buyer interest. Not every condo will be a winner, but the right condo bought at the right price can still be a solid entry point. Now talk about what goes wrong. Now here's where people get themselves into trouble. They buy based on emotion. They buy because they think prices will skyrocket. They buy because a realtor, a friend, or a social media made it sound easy. But the market doesn't care about hype. The market cares about demand, affordability, rents carrying costs, and long-term usefulness. A lot of buyers overestimate rent and underestimate expenses. They ignore condo fees, property tax, insurance, repairs, or vacancy. And then they wonder why the property isn't producing the return they expected. That's why the smartest buyers right now are the ones who focus on fundamentals. How smart buyers think. The best buyers I'm seeing are not trying to time the bottom perfectly. They are asking better questions. Can I comfortably hold this property? Will this still be desirable in 4 to 5 years? Is the rent strong enough to support the carrying cost? Does this property have a clear resale story? Am I buying something useful or just something expensive? That's a much better mindset. Because real estate is not just about owning something, it's about owning something that works. So, if you want to make money in the current GTA market, don't just ask what looks exciting today. Ask what will still make sense later. For a lot of buyers, that could mean a freehold townhouse. For others, it could mean a small multiplex. For some, it could mean a condo in the right building and the right location. And for others, it could be a home with suite potential that helps create extra income. The point is simple: buy for usefulness, buy for demand, and buy for the long term. That's how people build real wealth in real estate. Not by chasing every trend, not by overpaying for hype, but by making smart decisions that still work when the market changes. Thank you for watching and giving all your love and support to us. It really matters. If you like this episode, please do share with others. We really appreciate that. And if you can comment on that, that will change the algorithm in social media. So more people who like this kind of podcast, they can see it. It will be really, really helpful. Well, seems like weather is getting nicer, and I hope you enjoying outside. Keep listening, keep commenting. See you next time. Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.